Good morning, everyone. Today we're looking at EURUSD. We are on the 4-hour chart. The dollar has fallen to a 2-month low or so after the Fed cut rates on Wednesday, and EURUSD is now trading close to an October high above 117. And if, of course, the 117 holds, then this could continue higher. There is, of course, also the potential like peak at 119.20 that we saw in 2025. And given the continuation and the fundamental backdrop and how this is supporting a weaker dollar, as well as a kind of more strong euro as well into next year, that could, of course, see new highs coming, but it's unlikely that is going to be coming over the next 2-3 weeks, i.e., in 2025. But of course, that remains to be seen. So let's walk through the macro drivers and the technical levels together, then finish with just a pure trade structure. So we have broken out what appears to be, for me, a running triangle. A running triangle is a triangle that its initial leg does not exceed the second leg, or let's just say the peak rather than just the leg. And in the case that we currently see, we have had a breakout outside that pattern at around 116. Okay, and since then we have been actually moving higher. This can be considered the breakout level, and this can be considered also the first leg to the upside, which has corrected. Okay, and now we see that move being to the upside impulsively. Okay, so on the one hand, if this is the one leg indeed, right, and then we corrected slightly at 116.15, then it makes sense that if this is indeed the extension that we expect to be as an impulse, we could potentially just go all the way up to 119. 28, which is the previous high, just in that wave. For example, we would see this extending to something like that. Then we'll get a deeper correction and then further continuation to the upside. And I repeat, assuming this is an impulse. Now, why, of course, is this happening? This is happening because the Fed cut rates on Wednesday, and Powell was also a little bit dovish. He actually emphasized that the Fed is now in a wait-to-see mode, and he pretty much ruled out that there's going to be any rate hikes in 2026. Also, there is uncertainty because there is a deeply divided Fed. The dot plot showed 4 members see no cuts in 2026. 4 see 1 cut, 4 see 2 cuts, and 3 see rate cuts falling below 3% by the year end of 2026. Meanwhile, there's just 3 members that actually wanted to hike in 2026. So, as you understand, there is a lot of uncertainty about what's going to happen, but this uncertainty might be also weighing on the dollar because there is actually more expectations for the Fed to cut anyway in 2026, right? Rather than just the ECB, if we compare that. So on that side, Lagarde spoke in London, and she said that Eurozone economy is showing a remarkable strength, okay, and that the ECB may upgrade its growth focus again at the next week's meeting, which is on December 18th, if I'm not mistaken. So policy is also in a good position. So it's very likely that the ECB is going to hold, okay, for the entire year next year around. So there is this divergence that it's supporting that leg to the upside. Now, if we really want to look a little bit further, what else we're going to see? A larger structure here that shows a cup and handle breakout. Okay, and if we do use the measured move projection, which is again, of course, we measured the bottom to the neckline over here, and the breakout or the retest, the breakout is at 111 or so. This brings us all the way up to around 122.20. Okay, so this is a larger projection from a larger structure that again points to the upside. However, all of these, the two scenarios that we've expected, the two structures at least look to the upside, right? Is there any downside potential? Of course, there is downside potential. There is always downside potential, even if we haven't yet completed that structure. I will give you an example. Typically, when we see corrections like this, okay, they actually You see the 78.6? They actually go to the 78.6. This indicates or suggests that in this particular case, okay, maybe it would make more sense for this to be an A, B, C, D, and E. Okay, so perhaps if we see prices extending up to around 117.90, 118, and we see a rejection at this trend line, then we start looking at supports at 38.2, which is at 117.13, then 116.50, because 116.50 is going to play an important role in this particular scenario. Why? Well, because if we did lose the 50%, it means that sentiment changes. There is a case that we see something like this, which is again supportive of more upside, but there is also a case that we see something like this, and then would go lower. That would be our next stronghold. Okay, if we do lose that low as well, and then the trend line, the trough here at around 114.70, then this would probably mean that we are going lower. That was our peak, and this is some sort of open broadening wedge. That was a simple correction, and of course we're going lower down. But are there many chances of that happening? Well, for now, we're just looking at it on the downside. From a downside perspective, we have come actually retested the 61.8 Fibonacci extension. So the reality is that there is still high chances, okay, that this continues higher as long as we remain above 116.97, which is a 50 Fibonacci retracement. Okay, so yes, there is potential for further downside. But as I said again, for now we have come above the 50%. And we didn't come above the 50% for a long time. You see, that was a rejection back in October. Okay, so this is what I'm currently seeing. I'm seeing any pullbacks being an opportunity to re-enter that long position. And how am I going to play this? I would be looking to go long at the 50% Fibonacci. Okay, and we'll be looking for different targets, but the ideal target, of course, or the medium term, let's say, would be at the previous stop, perhaps even higher up for those who are more of a swing, want to play it more in a swing sort of nature. So the stop loss here would be going just below the previous swing low. Okay, I repeat, this is likely a third wave to the upside, and typically these are the most impulsive. So I think we are at a good stage to assume that prices are not that likely to go back below the 116.14, at least until we complete a fifth wave. If this is one and two, and this is the third, this is probably the beginning of the third. So, moving back even below the 116.81, it's highly unlikely at this stage. If we did, then this most probably is a just simple correction, and we're going to see prices turning lower. And something that we have to pay attention for this would be the extension to well, you see, we already are above the 100%, obviously, much clearly. But if we see this extension stalling at 161.8, and then we lose the 100%, this is when we start being worried about this actually turning against us. But for me, this is at 117 or so. This is the place where I'll be looking to go long. Okay, my stop loss just below the previous swing, and my not ultimate target, but one of the targets I will be considering to start looking for trailing stops, it would be here. The target I would be looking to take, the first take profit would be at around 118. Okay, and then I would probably just go to 118.50 and then 119 and beyond. It is very, very logical for Euro USD at least to really play the psychological levels, because they actually work. Okay, and they work most of the time. So bottom line, traders, Euro USD has broken out of a potential running triangle for now, or broken out this structure at least, and that could perhaps even be seen from some as an inverse head and shoulders, although at the wrong place, because the Fed is cutting and divided. The ECB is not going to cut, and it might upgrade also growth. The dollar is at the 2 month low as well. So the rate differential between the Fed and the ECB is narrowing in favor of the euro, and the technical structure also supports further upside. So I will be watching any pullbacks, and I will be watching also the breakout of this triangle, and because these are levels to consider taking profits or buying into the bottoms or into pullbacks. Okay, so drop your this setups in the comments and follow for more macro plus technicals trade ideas.